This is the first time I'm doing it from India. And I'm in Lonavala, correct, currently. So if any, uh, you don't get a smooth stream, please excuse me for that. We'll try to do our best, okay? So with this, I start. Now, as we know, the current timeline, what happened is the COVID in 2020 shook the world, and the market panicked in the month of, and then it rebounded by 60-70% from the bottom, correct? And businesses have started opening, uh, and the global stock market was at all-time high in the month of October, November of 2021. Since then, small corrections have been coming as the inflation has gone up everywhere in the world, and U.S. interest rates have bottomed out, and they're taking a U-turn. And as a result of that, the correction started in the Nasdaq stock market. And with last week, Russia and Ukraine crisis, the market really tanked on Thursday, and it rebounded on Friday. So our current investment in the stock market, I'm going to talk about that. So last 3-4 days, we did a lot of thinking and research, and what what I came to the conclusion is what factors natural disasters, hyperinflation, and frauds. So if you categorize all the corrections in the stock market over a period of last 100 years, they would fall in one of these buckets. Now, geopolitical risk means anywhere there is a reversal in the government policy, the markets wobble, correct? So like interest rates were falling and they went up to practically zero, and US Federal Reserve was printing money and giving free money to everyone. Now that policy they are stopping and they're reversing. So that is a policy reversal. So when the policy reversal happens, the stock market little bit wobbles. So that's what happened. But then the war in Russia and Ukraine. Now, if you go through the history of wars and natural disasters, those corrections are not corrections. The stock markets, they bottom out very fast and rebound very sharply. So same thing happened COVID time. COVID was a natural disaster. This war is also artificial, and but the market bounce backs very sharply. If you take, I'll share them some data with you. Gulf War One, Gulf War Two, the market rebounded very sharply then. Uh, Now, same thing is going to happen this time. No, sorry, let me go back to this earlier slide. Then economic instability. So the real downturn in the stock market happens when there is an economic instability, which is not there currently. So economic instability and frauds. So in 1994, Harshad Mehta scam, 2001, technology, that scams, all those fraudulent companies came. And 2008, you know what happened in Lehman Brothers, frauds again. So those kind of frauds and excessive leverages, they create long-term instability, correct, in the market. Now, this time, you will say that, yes, in NASDAQ or even the IPO like Paytm, they were overpriced and that they should yes, to some extent, yes, they were the cause for the correction, but the magnitude was not such is not such a big that overall economy is going to change because of that. Now there can be, as regards inflation is considered, there can be four scenarios. You can have normal inflation, you can have deflation, or you can have recession, correct? Or you can have hyperinflation. Of all the four scenarios, inflation is the best scenario. Uh, if hyperinflation happens, means inflation above 10%, then stock markets tank. If deflation happens, stock markets tank. Recession happens, stock markets tank. So inflation means what? Inflation means the demand for goods is higher than the supply, and that's why prices are going up. So that is a good scenario. The stock markets do well during that time. Do well. So we are currently in inflation. The normal inflation in India is 6 to 7% currently. In US also it's 6 to 7. Now, which is not normal, which will come down to 2 or 3% in next few months because of the car prices and everything will stabilize. So we don't have fraud just now. We don't have fraud in the stock market. Basic fundamental things have not changed because of the Ukraine crisis. Now, even today morning, I was talking to one of the gentlemen. He said, won't the oil prices shoot up? I said, yes, partially because they said Russia oil nobody's going to buy. That's not true. Russian economy totally depends on oil and gas revenue. So they will need that revenue. So they are going to supply oil and gas. So there is not going to be any shortage of oil and gas. And I don't see the oil prices shooting up below above $100 a barrel. That's not going to happen. And that's why Europe is also going soft. So I don't see oil prices crisis. In fact, oil should come down, and the stock market will start picking up starting next week. I'll give you the second scenario. So why this is not going to do a change in reversal of the course of the stock market. Let's look at the macro picture. So. The macro picture is the world has the highest number of older population today in the world. Now, the total number of people living in the world today is above the age of 50 is more than all the people who died after the age of 50, right from the beginning till last century. So the older people, they have a lot of money power, they spend a lot, correct? The younger people, they don't have money. At the age of 22, you don't have money. But at the age of 50, you have money. So the global economy is still going to have a lot of demand for products and services. So there's not going to be recession. Now, before I go more on that, let me share this chart with you. So if you see in this chart, because of the global financial crisis, this time there is no global financial crisis. Uh, there is no crisis globally today, which cuts across all the countries. That is not there. What is there is some local crisis, and which is not going to spread. Now, if you look at that normal crisis, the stock markets always rebound. And it's much higher than what it was on the day the event happened. So we'll see that. Now, in this slide, I'm sharing you all the major events since the Second World War. Now, if you see these events, whenever the war has happened, the markets have rebounded sharply. It has not gone down. The markets have gone down, corrected because of economic reasons. It's because of the Lehman Brothers crisis in 2008. Those kind of crises happen. It has not happened because of the wars. So I don't see that happening now too in this year. And this war was an opportunity on Thursday to get into the market, correct? So now I'll give you another law of physics. If you, let's say, bow and arrow, you want to shoot an arrow, you have to pull the string backwards. So if anything has to go forward, first it has to go backward. So the same thing happened on Thursday, correct? The correction has created a launch pad for the markets to recover and move further up. So that correction was a healthy correction after 2 years of bullish run we had. For 2 years, we had a very good run. And what happened is many platforms like Robinhood, Zerodha came, and it became easy money. That easy money has stopped, and that's a healthy correction. Now, coming back to is the long-term story change? Has the long-term story about the global economy has changed? No, it has not changed because, as I said, the spending power of people is still intact. Now, before I go to that, in this slide, what I'm showing is most of the corrections uh, don't happen on a regular pace, but they happen once in a year. 10% correction happens once on an average and once in a year. Now, how many times if you see a correction of more than 10% happen? The last correction of more than 10% happened in 2020 because of COVID, 40%. It happened in 1 year that you can see in 2020. Then it happened in 2007 and 8 when the correction of more than 10% happened 6 to 7 times in that during that period, correct? Otherwise, normally 10% correction happens only once in a year. So that trend is there, and I think this was that trend. That 10% correction is done now. So we'll have a little bit of volatility, but we won't have. I don't see the market going down more than 5%. from the current level, and the upside is much higher, correct? Because the global economy is intact. Now, let me explain that to you. Uh, Now, what events you look for? Why global economy is intact? Uh, as I said, there is a lot of in the world. There are a lot of older people. Now, developed world has the average age is above 40. They are short of people. India and Africa and South America are the few countries where labor is in excess, correct? Now, India, having a largest English speaking population, is in a sweet spot political environment, and we have a decent balance sheet of government of India. So and a lot of good reforms were done in last 10 years. And a lot of cleaning up has happened in last 10 years. So we should Indian economy should do well. And if the moment the global economy stabilizes, financial market stabilizes, we'll see a sharp rebound in the stock prices. Now, coming back to what events we look for, inflation. Now, if inflation goes beyond 12% in India, then yes, then we have to watch out for. But inflation of 6-7% is a healthy inflation. Now, capital expenditure by government of capital expense when we do new projects. So three kinds of people do new projects. One is the government, one is the private sector, and one is the families. Correct? At our home, when we buy a new fridge or we buy extended a bedroom balcony. Correct? Those repairs we do, correct, or we house, those are all capital expenditures. So the capital expenditure government has started, private sector has now become net positive, correct. It's becoming slowly and slowly allocating higher money for capital expenditure, and the highest capital expenditure is coming from the family sector. We have seen a rebound in real estate markets, and so that's a good sign. Now, as foreign investments in last 4 or 5 months, FFI have sold $29 billion. Now, out of that $29 billion sellings they have done, $24 billion were stocks were acquired by domestic mutual funds. So that's a good thing. Now retail investors are still buying and investing. Now, global stabilizes, you will see FFI coming to the Indian market and buying the same stocks. Now, those stocks they will have to buy at a higher price because the selling what they did was acquired by the mutual funds, and they are most of these mutual funds are long-term investors. So we are the foreign financial institutions don't buy you know, speculative stocks. They buy percent of their buying goes in blue chip stocks, and those blue chip stocks they are going to be at a higher level than what they have sold. So now I don't see selling coming from the retail investors in India. Because there is no other alternative source of investment today, because still bank deposit interest rates are 5 or 6. People are getting more older day by day, correct? And the fertility rate, the birth rate is going down. Families are becoming smaller. So as population ages, they have more money, they want to buy more services. So that brings in a lot of demand for products. So I don't see a recession. So that will continue, correct? That will continue. Now, as regards inflation, which we have seen in short term because of COVID and excess liquid market, that will slow down now. The inflation which we saw in last 1 or 2 years was basically in automobile sector, correct? The prices of car in America went up by 25%, 30%, which has never happened in last 50 years because of the disruption in the global supply chain. Now, with global supply chain getting stabilized in next 1 year, we'll see inflation coming down in US, and that will stabilize the market also. So I don't see that many risk here. Now, if you look at the market cap of India, is the highest uh, share in the global. Today, Indian stock market gets a premium. So I'll give an example. The PE of US Dow Jones is 19. The PE of India is 35. After this correction, it was 39.40. And the PE of China is 9. Or not even 9, it may be 7 or 8. Why? Because governance, the Chinese companies are not well regulated. They are not more transparent. So compared to them, India is very transparent. Regulation is good here. So, and there are very few countries in the world where you see a double-digit growth. Uh, and that's why India gets a premium. Indian is every FFI needs to have a small allocation to India. And today in the global stock market, India's share is almost gone to 3%, $3 trillion. Correct? It's almost 3%, which was 2.5 on a long-term average, and we'll see that even going up further. So that in Russian stock market will bottom out in the coming week. China's stock market also has bottomed out a few months back. China corrected by more than 70% last year because of the crackdown in Hong Kong and geopolitical risk. Uh, if you see, despite this all this problem, the flow of funds, investments in the Indian stock market is going up month by month. This is mostly from real investors because other investment options are very few in India today, are very few, and equity is still a growth asset which is intact. Equity still can give you positive return over the inflation return. Bank deposits today give you a negative return because inflation is 6%, bank deposit rate is 5%, you pay 30% tax, your actual real return is negative. Now, if you manage your equity investments properly, you can get very good decent return. What happened is people try to look at it very short-term perspective on a weekly basis. Equity investments should not be done on a short-term basis. They are for long-term, for 2 years and 3 years. Anything which you require next 2 years should not come to equity. So the stocks in green, they are currently outperforming the Sensex. The stocks in red are yet to be bottom out, correct? And the white ones are bottomed out. And the green ones are in momentum. So this is where we track, correct? And this, when I see this pattern, it shows me, it tells me that uh, there is not going to be deep correction as many people fear. As many people fear, the correct any correction should be used as an opportunity to build your portfolio. So that's the other trend I'm seeing. But the fundamental trend I'm seeing is that the demand for goods and services is going to go up drastically, and people are going to shop organized sector from unorganized sector. So the economy is shifting last 2 years, and it's going to accelerate that. So that trend, because of all this, I see Indian markets doing very well. Now, what trends have not changed? Now, what trends have not changed? So if you see the birth rates are falling, worldwide birth rates are falling. Today's young generation, they want less. Uh, Half of them don't want to get married also. Forget. And then those who get married, only half of them wants to have kids. So the birth rates are falling, and older age population is becoming bigger and bigger. So this is going to fuel demand for services. Developed world is aging, and at the same time, India is young. So Indian labor is going to get absorbed worldwide. India is going to be one of the biggest supply of labor, and that is going to bring a lot of money to India. Mm. Technology and service sector is going to gain further. In the global economy, the share of technology and the share of services is going to increase further. So as you get older, you need more services, correct? We need less product. So same trend is going to continue. And the world's wealth, today the wealth in the world is at the highest. So there is a liquidity everywhere. So people have money to spend. And that, now the other thing I'll give you, last 2 years, the travel industry, like hotel industry, have seen the worst crisis in last 100 years because COVID, nobody could travel internationally. So take companies like Indian hotels, correct? They are the best top 10 hotels in the world, and international tourism stopped. Now those stocks have bottomed out. They have bottomed out for next 2 3 decades. Because in this crisis, all these companies, what they have done, they have cleaned up their balance sheets, and they've Indian hotels stocks, all those leisure stocks, they've bottomed out for next 2 decades. So I see this as a very good opportunity. Yes. So building a portfolio. So when you want to build a portfolio, remember, it's a long-term strategy. You can't build a portfolio buy today and next week it goes up. You're buying a portfolio. When you're building a house, you're building a house for next 20 years. Same way, building a portfolio is a strategy for next 2 or 3 decades, and for next number of years. Uh, a week here and there doesn't matter. Corrections are very good opportunity. Other thing I'll tell you, there is nothing in the world without pain you can get it, correct? So there is a pain in every gain. So if you want to gain, we have to go through that pain. So and you manage that pain professionally, like the corrections of last week, and who got stock market. So they got margin calls. But if you had your savings and invested in the long term, absolutely no issues. So without pain, you can't make money in stock market. You have to have patience. Patience is the name of the game, and that is intact. So the other thing, many storms, mm, and they do disrupt in the short term, but the life changes. It cleans up the system. It cleans up the path. Correct. So in America, we say when it's ventured into it, and they got hurt. It's unfortunate, but if you come into the market without doing proper preparations, it's bound to happen that way. So, investing is an art and science. You have to be very clear and very professional about it, and you have to invest in a very with a long term. Like when you want to plant a mango tree, first you have to dig. Correct. First you have to dig. So you're going in, and then the mango tree grows. Same thing happens in stock market. There's opportunities and invest more. And then you have to hold it with patience and it will grow. And that's the message I wanted to give today. Now I'm ready to take some questions. Feel free to ask me questions. Yeah. Okay. Um, yeah. First question I get: why do we see continuous net selling from foreign financial investors in FFI? So there are three kinds of FFIs, correct? All FFIs are not same. Like all investors are not same. So there are one FFIs are pension funds who are very long-term investors. Then there are hedge funds, and there are other FFIs who are mutual funds, correct? Mutual funds, ETF. Now, those hedge funds and the short speculative FFIs also. So those FFIs they are trading, correct? That's hot money we call them. So that hot money always chases where the opportunity is there. So when there was opportunity in India, they got in short term like a traders, like how individual traders are there. They're fine. FFIs also, some of the FFIs also are traders. Um, about them. Not all FFIs are same, correct? So those FFIs have been selling. The very same FFIs who are selling, they'll come to buy again, and they do that based on short-term events. So they saw that interest rates are cycle in US is going to turn around, so they traded. Now you will say if they are trading, why can't we trade? Trading is very expensive. uh, like an individual investor, if you and I trade in mutual funds, then what happens is we have to straight away pay 10% tax on capital gains. And so 10% cash goes out of our portfolio. And if the market doesn't fall more than 10%, that means we are going to buy the same fund by paying 10% tax. So your cash outflow is there and you'll be able to buy. So trading in mutual fund is not advisable. Now, if trading in stocks, little bit, yes. Little bit means if you have a portfolio of 1 crore and you have 20 crore equity portfolio, equity exposure, and 80 crore, 80 lakhs in mutual fund, that 20 lakhs, of that 20 lakhs, you can trade in 4, 5 lakhs, but not in all 20 lakhs. What happens is if you become trader, you forget you can't be an investor. And investors make maximum money. So I'll give you another example. The total market cap of the world is $100 trillion. The original investments by all on all those shares must be less than $5 trillion. So $95 trillion is the capital gain over a period of last 20 years. Now, who has earned those $95 trillion? 95% of this, 90% of the earnings are done by investors. Traders are very few. So out of 100 traders, only 2 traders make money, 98 lose money. So the FFIs, some of those FFIs are traders and they'll come back. So we don't have to worry about them. And you know, it's called market because people come and buy and sell. correct? People come and buy and sell. So read too much into FFI. Uh, the same FFIs who are selling today will be buying. And this has happened not for the first time. In last 30 years, FFI have been in India. Many times they have come sellers, but every time they come buy, market goes to new 52-week high, correct? So FFIs are not net sellers for the first time. They have been sellers in 2008. They have been sellers in 2020 also when COVID came. And the very same FFI bought at a high level in 2021. So don't worry, don't look into that too much. So next question is, do you think in this kind of volatile market an index fund is better than thematic fund? So index fund is good for trading, correct? Index for trading. Thematic fund is good only for 2 or 3 months. Then index funds is good. So I'll give you a classic example. Uh, Last week, in our equity portfolio, direct equity portfolio, we did buy Nasdaq ETF, which are listed on Bombay National Stock Exchange, because currently you cannot invest in mutual funds because the limit is over. Now Nasdaq corrected sharply, correct? So Nasdaq 100, Motilal Oswal Nasdaq 100 uh, fund, which was 121 rupees per unit, had come down to 100. That fallen down by 20. So we bought those, but this is a temporary investment. This is a trading investment, correct? Now index fund is good for short term to medium term. For long term, thematic funds are good. So your strategy should be, now when you're buying an index, you're not buying a sector, you're buying the whole market. When you're buying a thematic fund, you're buying a sector which is more focused and where you see more growth than the whole market. That's the difference. Yeah. The next question I have. India will become electricity export hub during the next decade. Mm. Yeah, so that's good, correct? That if India becomes a net exporter of electricity, we won't have power cuts. We'll have very good infrastructure. Our internet and broadband connections will be very good, and our productivity will be very good. So that's a very good thing, correct? But there is no. This is a long-term impact, and of course, if India is going to be a major economic player, all those things are bound to happen, correct? Good things bound to happen. Yeah, thanks for that. Do you think after such stellar performance by IT and pharma in 2020-21, they will still perform in the coming years? Yes. Today, without IT, can expand. Even take my simplicity, correct? Our biggest expenditure after salaries is in information technology. Every year, expense on IT goes up. The same trend is going to be in every industry. Now, the stock prices, which have run very fast, now, okay, so last year it gave 50% return. This year it may give 15% return or 10% return. That's fine. But they are not going to be negative. They are not going to be, and you need to have IT and pharma in your portfolio because both are defensive sectors. Um, yes, in the short and medium term, infrastructure and banking stock may outperform IT and pharma, which is true. Now, so you have to rebalance, but you have to be in all those sectors and you have to make sure that you have a proper balance in the portfolio. Uh, yeah. With this, let me see if I have any more questions. Which sector is going to be more export oriented in the coming decade? Wherein the need for Indian IT professionals is going higher. I don't think we have any alternative for them. And Indian IT professionals are more trusted than Chinese or any other countries or Russia. Thrive in software services. India will also do very well. Any knowledge-based industry, pharma, they will thrive. We'll see in manufacturing the way people are expecting that kind of to compete with China. The China is the number one in manufacturing because of its scale. Now, for India to come to that level, it will take quite a few years because a lot of things have to change, correct? And building that kind of a scale is not so easy. And even for many companies to shift from China to India, it will take time because the change management is very expensive. So manufacturing will pick up, but gradually, not at the speed like IT or pharma. Yeah. One more question I got. I had a client who talked to me in the morning. He said, "Won't the energy prices shoot up, oil because oil, and so it becomes above $100, and it will affect automobile and all those things." I said, "No. Russian economy. If you look at Russia, uh, 80% is energy, correct? Now, Russia, if 80% is energy, and they will make sure that they are able to sell their energy, correct, to India, to Middle East, if Europe or America doesn't buy it. Now, for Europe, energy is very cheap to buy from Russia, uh, the next door neighbor. So it's going to be tricky. So I don't see energy prices going shooting up. There is not going to be shortage of oil, and in fact, I see oil is at peak now in the short term. It will correct. And where does Indian invest energy sector stand in? Investments of renewable energy and green energy. Um, there is a lot of awareness, but the impact of that in the stock market is going to take 4 5 years. It's not like US, where overnight. I don't see that happening in the near term. Yeah. Hmm? Thank you very much. Thanks for those good questions. And use these corrections to build your portfolio. Uh, it's a very good opportunity. Thank you. Bye bye.